Good day, Real Vision viewers. This is Tony Greer of TG Macro, editor of the Morning Navigator newsletter. I'm here today with Dr. Ahnaz Al-Haji, a preeminent energy market expert. He has been doing some talks and interviews around the market, and I am thrilled that I get to ask some pointed questions to him myself. Dr. Ahnaz, how are you doing today?
Good. Thank you. Thank you for having me on.
Yeah, of course. Thanks for coming on. Look, I was asked to interview you at Real Vision, and I literally jumped at the opportunity because I've listened to a lot of what you've been speaking about lately, and I want to hear a lot of your thoughts. So let's talk about the price action on the screen today. So we've got a 7% pullback in WTI from about 102 to 96.5. Seems like it's being driven by all of the heavy recession fears that have been pushed through the media in the last several days with the flattening of the curve. Markets pricing in a recession. We've got a tighter Fed. Tell me your thoughts about last sale oil here at 96.5. What's driving price right now, Dr. Ahnaz?
Generally speaking, if we look at oil market fundamentals alone without any macro variables as is, prices should be between 100 and 110. But as you mentioned, because of recession fears and because of the fact that Russian oil is still in the market, unlike what people expected in the beginning, and OPEC basically been increasing production, as we've seen from OPEC report today, despite the loss of Libyan oil and Kazakh oil and others. Despite all of that, it is very clear that the recession fears played a big role today in lowering prices the way they did. In addition, we have other issues because President Biden is going to visit Saudi Arabia in a couple of days. So he's going to be there on the 15th and the 16th of July. And some people expect some good results out of that. I am not that optimistic about it, but some people think that it might yield some results. So we'll see. So in a sense, we have macro variables on one side, we have political factors on the other.
Exactly. Great call. So let me start. Let's go back in time then right now to kind of how we got here. I would love to hear your presentation sort of what, how the Biden administration's energy policies have sort of turned the energy markets upside down. And I'm talking about, from the starting prices where they were when Joe Biden took office. Can you go through a little bit of the path of how we got here? Because I've got some specific questions for you about where you think we're going.
The answer basically is all the above. There were several factors that played a role in this. And it's not only because of COVID-19 in 2020. It goes back to 2015. 2015, the market collapsed, oil prices collapsed. And since then, we have a major decline in investment in the oil industry. And it recovered little, especially in shale, and then it declined again in shale. It went down worldwide. The issue that emerged after that decline is all of a sudden by 2018, we have several issues that played a role in what's going on today too. We have Trump pushing for lower prices all the time. Every time prices went up, he tweeted and he put pressure on Saudi Arabia, others. We have Trump who reimposed the sanctions on Iran and at the same time asked the Saudis to increase production to compensate. And after they started increasing production, he gave exemption to all Iran customers. So the market collapsed again. So by the time investments start picking up, it went down again because of that. At the same time, by 2018, we have this climate change policies kicking in with massive media support. And if I was in charge of climate change action, one thing I will not do, I will not hype the media, because by hyping the media, I will end up losing at the end. And that's exactly what's happening today. The media hype scared investors. We ended up with a situation where we have big funds divesting from energy, divesting from fossil fuel, divesting from oil and gas, which is, by the way, one of the biggest mistakes they do, because if they care about climate change, they should stay at the table and make the change from within. They ran like rabbits and they sold their assets to someone else who does not care as much as them about the environment. So they are contributing to that climate change thing. so the divestment, the hype of the media about electric vehicles, the hype about shale when Trump was in office, because even the International Energy Agency was talking about this. Literally, they use the expression explosive growth. So why I have to invest if shale is going to increase production to cover all the growth in oil demand? Why I have to invest if electric vehicles are going to destroy demand? So several factors led to this decline in investment on one side. Then COVID came in. With COVID, we ended up with so many problems because COVID is two parts. We have the lockdowns part that killed demand. And then on the other side, we ended up with the supply chain issues that killed supply. And we came to the Biden era. And what Joe Biden promised? He is going to literally stop drilling on federal land. He is going to stop drilling in federal waters. He is going to do this. He's going to do this. He's going to do this. And this is widely known because it is on YouTube and everyone heard it before the elections. So he did not help. And instead of investment increasing with higher prices, people were scared because they don't want to get stuck with some lawsuits or legal issues because of this on one side. On the other side, how you are going to convince an investor to give you money when he is listening to Joe Biden every day at that time telling what he is going to do? So investment did not increase with higher prices. And that's where we are today.
Very, very interesting. So how, Dr. Anas, if we continue on this path, you know, where are we going if we continue to become beholden on energy supply from other countries, right? Right now, we've obviously got a hot button item with Biden going to the Middle East. There's a lot of opinions going back and forth about what he can do. But I listened to your spaces on Twitter. I believe it was the last one that you did where you went through a list of about 10 or 11 items that the Biden administration has at their disposal to potentially lower energy prices. And then you seem to go down the list and tick them off one by one saying, this isn't going to work, that isn't going to work, this isn't going to work. Can you go into some of that about some of the options that he's exhausted and maybe what options he may have left?
At that time, I listed 11 policies the Biden administration can adopt in order to lower oil and gas prices. At their face value, it looks like they work. The problem is we have to look at it, look at the economic side, and we have to look at the political side, and we have to look at the short term versus the long term. So we have to look at it from various ways. And the most common policies basically was to go back to the old days where they ban U.S. crude exports. U.S. crude was banned between 1974 and 2015 from being exported. No one cared during this period because U.S. oil production was decreasing. No one was exporting anyway. So no one cared about renewal when this was renewed every year because it was a presidential decree or presidential order. We ended up with the following situation. The shale oil revolution started in 2009, 2010, and production started increasing, which was fine. It was all right. 11, 12. We had the Arab Spring where we lost some oil, and that helped really mitigate prices at that time. But we ended up with a situation where U.S. refiners couldn't take this oil anymore because shale is light sweet crude. And U.S. refiners have very specific capacity to handle that type of crude. Once they replaced all imports of the same quality, they maxed out. So we reached what we called at that time a refining wall. So where that oil is going to go? During that time, refiners had a feast. Why? Because this was blocked from being exported, and the price differentials between WTI and Brent increased to more than $20. So U.S. refiners had a feast because they used the domestic oil at $20 cheaper, and then they sold the products in the international market at the international price. So they were pocketing the money while U.S. oil producers being hurt. So they put a lot of pressure on the Obama/Biden administration and told them, look, we have to start exporting. And at the end of 2015, the Obama administration allowed U.S. U.S. exports. And with that, we ended up with the following situation. We produce a lot of light sweet crude, but our refineries were geared historically toward the medium and heavy sour because we were importing that from overseas. So because of this mismatch, we will continue to increase exports with the increase in production, and we'll continue importing. The idea of energy independence is a complete nonsense because our trade balance in energy or oil could be positive, which means that we export more energy than what we import. But that does not mean energy independence because we still import 6-7 million barrels a day of oil of a different quality.
Very interesting. Okay, so let's talk about that right now, Dr. Anas. The crack spread that everyone is kind of keyed in on, that 3-2-1 crack spread that at least we can trace on Bloomberg, that has historically been a single-digit dollar item, maybe as wide as $10, has now widened out to the wides of $60, currently settled back into the mid-40s. To me, this is a good sign. That was a good sign of gasoline demand. Can you speak to that a little bit about the position that the refiners are in now and whether or not gasoline demand is going to fall dramatically if we slide into a recession and the price can fall, or it'll be a scenario where maybe we slide into a recession, but oil prices remain firm because the market's so tight? And I'm only wanting to speak to that a little bit, Dr. Anas, because as you can see, the sell-off on the screen in the spot price is very steep, and the market structure looks to remain fairly firm as far as I can tell. And I don't get to see that very often. So let's hear your thoughts on that whole package, if we can.
If you don't mind, I just would like to finish, to go back to the earlier question, because
yes, I cut you off. I
apologize. So what we ended up with is during that period that the price differentials were very large and U.S. producers got hurt and refiners benefited. So if the Biden administration right now reimposes the ban on exports as a policy to lower prices, we are going to end up with the same situation where the differentials are going to be very wide and refiners are going to take that oil and ship it overseas, and American consumers are not going to benefit from it. So, and if we go down the list of all these policies, basically almost the same idea. Someone is going to get hurt. The U.S. economy may not benefit, the consumer may not benefit, and at the same time, if we ban exports, even if we ban exports of gasoline and diesel, we end up hurting the Europeans who are literally trying to impose a ban on Russia. So we end up hurting our allies too. So if it works in economics, it does not work in politics. If it works in politics, it does not work in economics, and that applies to all the 11 policies. So to go back to your question about the gasoline issues, and we have serious refining problems in the U.S. and some areas around the world. So whatever happened in terms of the crude market and whatever happened in terms of recession, product prices, gasoline and diesel, is not going to decline proportionally to the crude decline because of a recession, simply because we don't have enough refining capacity to provide that gasoline and diesel anyway. And at the same time, we are ending up with a situation where China and India are still restricting their exports of products. And probably we cannot even go and import from them anyway if we need it, simply because most likely those products are coming from Russian oil anyway. So we got stuck. And therefore, the main conclusion of this is as crude oil prices decline because of the recession, gasoline and diesel prices may not decline proportionally. And that will create a big problem for the White House, because the White House been complaining about this, why gasoline prices did not decline like the way crude prices declined. They don't understand what the mechanism is. But the fact is, with the recession, we are going to encounter the same problem, and probably we'll see more pressure from the White House on the owners of gas stations.
So that's quite a predicament now that the Biden admin is in, having, not totally, but a lot of their policy has contributed to the higher price. We're coming up on midterm elections now, and, you kind of exhausted so many of the possibilities and so many of the options he's had. what would the Biden administration desperation option be to get gasoline prices down? Do they have one? Or do you think it could be a scenario where maybe WTI backs off, like you just said, but gasoline remains $4 or $5 at the pump?
Something got to give. I mean, whatever the policy is, there is a trade-off. So let's focus on Biden visit to Saudi Arabia. I strongly believe that both sides have already agreed that oil will be kind of a side issue. It's not going to be among the main issues. And the idea here is, if the Saudis are not going to help, why waste political capital on this while they are not going to increase production? The fact is, even if they promised Biden to increase production, that production is not going to be in the US until way after the election, probably early 2023, because they need to produce it, they need to ship it. It takes probably about 8 to 9 weeks to arrive in the United States, and then you have to ship it within the United States, etc. So we're talking about 2023. So Biden is not going to benefit in terms of election, just wasting political capital on convincing the Saudis to do that. But the Saudis might end up extending an olive branch by increasing supplies. And here, supplies, I'm going to put two underlines under supplies. The reason why, because supplies are different from production. They may not increase production substantially, but they can increase supplies. And the reason why, because they consume a lot of oil during the summer months in the power sector. And by the middle of September, that's almost the end of the summer there, and the cooling season basically comes to an end. And as a result, they can end up with 300,000 to 400,000 barrels a day of oil that can be transferred from domestic consumption to exports without changing production. So the word supplies here is very, very important. Now, Biden can come back and claim victory regardless of the real impact on this, which is good for him and good for the Saudis anyway. But the issue here is, if he really wants to do something serious about gasoline prices, he got to take some serious measures. And some of those serious measures come at a cost. Is he willing to do that? For example, we've seen it in China. China went for a lockdown, period.
Oh, I knew you were going there. That's his only option, right?
Well, I mean, you ask for those extreme options, and this is one option, is to go for a lockdown and he does not have, by the way, Biden does not have to go for a lockdown. Just some Democratic governors can lock down their states.
Yeah.
And he will not be affected by it politically. And that's enough, basically, to provide some breathing space in terms of gasoline and diesel consumption, at least before the election. But again, it's about trade-offs, period.
Yeah, I can see that. I have a question for you about something that's super topical. We know that the SPR release has likely, in my opinion, probably been keeping oil from kind of running away on the upside, if that's fair. And I'd love to hear your opinion. How do they continue to play the SPR release number one? And will he try to tap that again? And the second question I have is the SPR release oil making it to China a scandalous event or an explainable event, right? I see both sides of the aisle getting all worked up that some oil went to China. I could kind of see both sides of the story on that one. I was wondering your opinion, Dr. Anas.
First of all, the debate about the effectiveness of the SPR been going on for 3 decades in the United States. And it reached a point where Republicans wanted to sell it and literally shut down the Department of Energy. They don't want the Department of Energy. They want to put it under like the Department of Commerce or something else. So they want to end it completely. And there was this debate even among professionals, what is the usefulness of the SPR? And for those interested, they can go to my Twitter account and see all the debate, because I wrote an article that sums up all these, both sides of the debate. We do have enough empirical evidence to show that the impact of releasing the SPR on lowering prices is very limited. And lowering gasoline prices is only a few cents. But you started the question with a very intelligent statement when you said, well, it prevented prices from going up. That's really where the impact is. The impact is prices should have been above $140 and we did not see it, thanks to the release of the SPR. But it's not the typical release. In fact, in my research 20 years ago on the SPR, what the main advice was, and this is public, people can see it on the web, it was that they have to announce the release of massive amount. People basically be laughing at that time when I said this. It's a massive amount, and it comes with a statement that we will keep releasing it until we see the results we want. Historically, it was, okay, we are going to release 30 million, end of story. Now they came in literally with this recommendation that we are going to release 180, and if we need to release more, we will keep releasing. And the use of 1 million barrel a day in his statement was, I know exactly, in a sense, who are the people who came up with this idea to say 1 million barrel a day instead of 180 over 6 months, because that was very important for the market to say. So the impact of it is it did prevent oil prices from going above 140. But for people to understand the dynamics of it, along with the increases from OPEC members, is that we keep releasing oil from the SPR and prevent prices from going up until we reach a level where they start depressing prices. And probably we are there. What that means is any additional oil right now is going to depress prices even more. So now, after releasing a very large amount, now we are seeing the pressure on prices for the decrease, because it already ate or countered all the powers that force prices up. And now it's the impact of it, or the weight of it, is larger than the other side, and therefore we are seeing pressure on oil prices. And therefore, any extra oil right now coming from OPEC is going to depress prices more than before, because in economics, everything is determined at the margin, not by the average. And therefore, if you reach a level where prices start declining, the additional 100,000 barrels of oil coming out of OPEC will have a larger impact than the same 100,000 2 months ago.
Right, because the oil market is still digesting the recent SPR release. Is that correct?
Correct.
Got it. Very interesting.
And regarding China, no, there is nothing. When I wrote that tweet that went viral in last September about the crude going to China, that was mostly a response to the energy secretary when she said this oil is going to go to U.S. refineries. And I responded by that tweet saying, watch this oil going to China, as kind of a response to the secretary. But that oil basically is going everywhere. And if it is going to China, that's really good. Because it is reducing the demand for other oil somewhere else, probably the Russian oil. So it has an impact globally. At the same time, it has a different impact that analysts missed. And the impact is this, that U.S. refiners are buying this crude. And if U.S. refiners did not buy this crude that's been released from the SPR, they would have been buying it from Saudi Arabia or Norway or Nigeria or Ecuador or any other country. And therefore, the demand would have been higher and prices would have been higher. So people are not counting the increase that would have happened in imports that did not happen because of the SPR.
Understood. Okay, that sounds like a fair explanation then. That I can live with. So let's get to where the rubber hits the road a little bit with ESG policy, right? It seems to me that everything is very lockstep between ESG, Biden policy, the Davos people, the World Economic Forum, Great Reset. It's all very, same playbook. Now that we see, we've seen finally some pressure on the administration about the gas prices and inflation, et cetera. And I just saw a clip this morning with Mark Haynes from CNBC asking a Biden energy secretary, if they would ever give in and allow some drilling on public lands. And the energy secretary's response was very much along the lines of, they have the leases and they're not exploiting them. And so I'm wondering, how does the Biden administration get away with that argument that seems so boldly out of touch with what's going on, when you also see headlines where, an Obama appointed judge just nixed this contract to drill on federal land. So how do we get through this smokescreen? First question that the Biden administration seems to be putting up that none of their policy is affecting price, and then sort of, what is their end game going to be? Are they just going to keep pushing back on the political pendulum and hoping that they can hold people, happy with paying higher gas prices to support the new liberal world order or something? Or is something going to break like it did in Sri Lanka, and we're going to have a disastrous situation one after the next in one country after another? And I know there's a lot to unpack there, Dr. Anas, but I'd love to hear you start wherever you like.
No, I agree with you completely. Probably this need a whole show on its own just for the ESG.
Let's do a commercial then.
The problem is when we talk about ESG, for some people, it is a religion, and you cannot criticize religion, period. You cannot force people to change religion.
Wow.
It takes years for people of studying to change the religion and convert. So forget about the idea of Granholm or others changing religion.
Right.
Okay.
Right.
And the way we got to look at it, every time they make a statement, they are reading their Bible. End of story.
Brilliant.
But what goes on the ground, and my interest, my research is really what goes on the ground and what are the unintended consequences of regulations and policies. And what we see right now is with ESG, that one lesson is very clear from Europe and the rest of the world. If you really want to fight climate change, the policy is very clear. You need a balance between energy policy and environmental policy. You sacrifice energy policy at the altar of environmental policy, you lose both. You kill both. And that's what we are seeing. And people who do the ESG, they don't realize the unintended consequences of those policies. I'm going to give you some real examples. When India removes subsidies on fuel and then increase taxes, and their taxes on fuel is the highest in the world right now. In the world. Now, what happened in India? Now, those poor families, poor women, are going back to the old closed coal mines and digging by hand, and those coal mines are collapsing on them, killing them. That's on one hand. On the other hand, they are going to the forest, cutting trees and burning wood. What happened to ESG?
Yeah.
Okay. So they need really to study the impact of it on the ground to see what's going on. That's number one. In Europe, they are going back to coal. Why? Because they sacrificed the energy security. They sacrificed the balance between energy security and environmental security, and they ended up coming back to coal, which means that they killed both. They don't have energy security and they don't have environmental security. But what's weird about this is the following. You look at what the governments are doing in ESG and what the companies are doing. And I have a full presentation on this. And the best way to conclude that is to use animal pictures to illustrate the behavior of each group. And one of the things that kind of striking, I call them the group of scavengers. The group of scavengers, when governments and companies tell their employees and officials, go back in history and tell me what I have been doing green for the last 4 decades. And Walmart will come in and say, you know what? I have those skylights in my stores, and I am already carbon neutral because I have those skylights, and those skylights been there for 40 years. I am already green. I've been green since 1980. And they produce reports. I'm not talking about Walmart here, but I'm talking about various companies. They produce reports about how they are approaching their carbon neutrality goal, and they are already 40% in from things that have been going on for 40 years. Large companies with campuses that had like 2,000 trees, they are literally counting the trees and counting the carbon they sequester. I'm talking about 100-year-old trees. They are counting them. So carbon accounting has become just the mother of all Enrons.
Right.
In this case,
they're making it up as they go along.
Okay.
Yeah.
A company. This is about the funds and companies that are divesting from oil and gas. A company found out that they own the small refinery, which is an 80-year-old refinery, and really the CO2 emissions and others are extremely high, etc. All they did, they just sold the refinery to someone else, and their carbon footprint decreased by more than 40%.
Holy cow.
just by selling it. But for globally, the refinery is still there.
Yeah.
And now it is in the hand of someone who does not care.
Right. So they chalk it up as we don't need an ESG score. And the company that had the ESG score says we're doing great.
Absolutely. Absolutely. So everyone is playing the game. And during COVID, many companies decided to have many of their employees work from home. So they cut the space of their offices, some of them by 50, 60%. And they claimed that on their carbon neutrality policies. And they said, look, we already cut our office space by half, and we did this and we did this, so we cut our carbon by this much. But someone else rented that space.
So we're literally playing, hide the assets or hide your carbon footprint kind of thing, right?
Correct. So we end up with the situation, basically, the bottom line on ESG is companies that are very sincere and government that are very sincere and people who are really sincere, they are going to go for the low-hanging fruit. And that's the maximum we are going to achieve. No one is going to bring that tall ladder to go to the top of the tree, period. So we are going to achieve the low-hanging fruit. It's good for everyone, but that's it. And where is the problem? The problem is all the outlooks for oil and gas and coal are based on the idea that we are going to get all the fruit out of that tree. And since it's not going to happen, therefore, the demand for oil and gas and coal in the future is going to be higher than all the forecasts. And we already talked about the lack of investment. So you can imagine where we are heading. We are heading for a massive, unprecedented energy crisis, not only because of lack of investment, but because of the failure of many of the green policies that we need to compensate for, and that demand is not being counted for.
Amazing. So it sounds like, I look at sort of, gasoline and diesel fuel and natural gas as the tip of the fossil fuel spear. And that seems to be the spear that's still staying alive and sort of cutting through a lot of the, excuse my French, bullshit of the ESG policies where, it becomes quite evident where they are battling physics with platitudes.
Not only that, we have other problems too. And I'm going to give you some examples. There are places where in Europe where electricity prices vary within 24 hours. And as a result, they might end up with negative prices like in the middle of the night or after 2 a.m. And people designed apps for that so they can get a notice that electricity prices now is declining and it's negative. Okay, so, and it's going to be negative in the next 4 hours. And what happened is, and this is as crazy as it gets, people basically are setting the alarms to wake up at 2 a.m. to do their laundry so they can get the negative electricity. So all of a sudden that ESG is changing our behavior in a completely abnormal way. It's literally slaving people.
Yeah, I mean, it seems like it's an attack on Western civilization at some level to me when they're coming at you with, you'll own nothing and like it. And, we're going to have to change our diet and we're going to have to get all the cows off the planet and we're going to start making concrete differently so that it's sustainable. And I just don't, when I see things happening like number one, the utter collapse of Sri Lanka, and number two, the fact that right now the Nord Stream 2 pipeline is closed for maintenance and Europeans have already prepared their citizens to have a full shutoff of Russian gas. So I'm just wondering, how are they going to go much further pushing these ESG policies when we are, number one, witnessing one country in Sri Lanka utterly collapse? We've seen the World Economic Forum take down the article from their website that says how we are going to make Sri Lanka richer by 2025, right? Literally admitting defeat there. And we are literally facing a winter of people potentially freezing to death in Europe. How are they going to continue, Dr. Anas, pushing the green agenda, pushing the electric vehicle story? Like, I don't see how politically it's going to become even possible at a certain level. What are your thoughts on that?
I'll tell you a story about this. I think it was a South African farmer who was talking to a journalist, and the journalist was telling him he has to care about climate change because with the climate, without fighting climate change, his land will be flooded, and therefore his house is going to be flooded. He's going to lose it all. Probably he will lose his life. Otherwise, this farmer will continue doing what he's doing and make money. And the journalist basically was complaining about the behavior of the farmer because that's contributing to climate change. And the farmer who never went to school, he is completely illiterate. And he said, that's fine. At least I will die rich.
Right. No, I love it. But that's what it comes down to.
So the problems we have right now is that it is a religion, and it seems that a lot of people are going to die because of this religion until they wake up one day and they find out, I was on the wrong path and I have to repent and I need to look for other things.
Yeah, that's going to be quite a confessional moment for the energy markets, isn't it? Here's a statement that I wanted to bounce off you. So, I've heard, and it's been recycled quite a bit, that energy price volatility is extremely bad for fossil fuel driven, debt laden economies like ours. Tell me what you think about oil volatility going forward, Dr. Anas. It sounds to me, and I don't want to lead the witness, but it sounds to me like you've got an overall positive view of the oil market potentially, right? Like prices may remain firm. How does this all tie together with that idea?
This is how crazy it is. The best way to explain it is to look at the last 160 years of the oil industry and look at the volatility and look at the prices and what the state of the industry throughout those 160 years. And what you see basically is we had always calm when we had a market manager. And we don't have a market manager in the market. We have extreme volatility, and that extreme volatility was damaging for everyone, producers and consumers. The fact that energy producers are happy with the $100 oil, that's not true. They are probably in the short run, but the next round, we already know, we've seen it in the 70s and 80s. What happened after that? We've seen it every time we have increase, we have a collapse after that. So it's not good for them. They have budgets to run, they have populations to manage, they have to feed their populations, etc. So volatility is not good for them. So we start with Rockefeller. Everything was fine until the federal government decided to intervene, and they broke the Rockefeller empire into 35 companies. One of them is Exxon, and the other is Mobil, etc. Then the volatility increased substantially. Everyone started complaining about waste. Everyone started complaining about increasing costs, about inefficiency, etc., which Rockefeller controlled completely. Then the government decided, probably Rockefeller was right, but I already have the antitrust laws. I cannot bring him back. So let me do what Rockefeller was doing. So the federal government talked to the states, and they started the Texas Railroad Commission, or they give the Texas Railroad Commission the authority to control the oil and gas in Texas, the Oklahoma Commission to control it in Oklahoma, and the other one in Louisiana, etc. And then, of course, they used the National Guard. They used literally weapons. They went in with heavily armed bodyguards, basically, to control the fields, and they did. And then we went through a long period of calm. Then we have the Seven Sisters internationally controlling the market. And as we went through this, we have periods of volatility because either wars, World War I, II, etc. We had the Suez Canal crisis, the 1967 war, etc. But after that, when demand increased substantially and there was no use for the commissions in the United States, so the reign ended. And the Seven Sisters experienced nationalism around the world, so they're being kicked out of countries. So we don't have any managers. So what the United States did during the Nixon administration, the federal government became the manager through price controls. So everything was controlled by the government, just like any communist country. So they became Reagan came in, liberalized the market without paying attention to the nature of the industry. So they literally threw the ball at OPEC, and OPEC was not ready, period. And OPEC struggled for about 15 years until was able to understand what's going on and what they can do. So we need OPEC or OPEC Plus right now. They cannot manage the market like the Seven Sisters or the federal government or the Rockefeller or the Texas Railroad Commission, but they can manage the extreme volatility. And what we did, the same way we did with Rockefeller, now we are using the same Sherman Act to sue OPEC.
How's that going to work?
Well, and Biden is going to Saudi Arabia, so he's going to sue them, but he's visiting them.
Yeah, very interesting. Wow, that is a wild dynamic. I mean, it seems like it reminds me of the added volatility that the stock market is experiencing due to the rise of electronic trading, right? It looked like they took the orderly markets away from the specialists, and they took the eye contact and handshake agreements for trading away from everybody, and they put it all on a screen where everybody is, fend for yourself, 100 shares at a time, and volatility in stock markets has gone wild. And that's what it feels like every time the government steps in and tries to control something, that they create a lack of control or they create chaos.
And that's what they did with sanctions. The U.S. is number one in the world in imposing sanctions, including oil sanctions. And what they did with that, basically, they increased volatility substantially, because instead of, let's say, for example, 25 countries producing oil and exporting oil, we cut them, let's say, to 18. So we ended up with concentration. And if we end up with any natural event in one of the 18 or any political event in those 18, volatility go through the roof.
And especially if they're going to continue to, number one, press the green agenda, and number two, deny it in broad daylight on television, in the press conferences and everywhere else. I think that they're only going to create, more and more political strife for themselves. When I see someone like Brian Deese, that's Biden's director of National Economic Council, and he comes over from BlackRock as global head of sustainable investing, it makes me think that BlackRock is calling U.S. energy policy because it helps them sell their ESG funds. And I'm just waiting for the pendulum to swing far enough, like it did in Sri Lanka, for us to have more food inflation and a pending crisis from there. Do you have a view on how the oil price being elevated for longer will affect food inflation and cause another potential crisis there?
Yeah, that's a great question, because we are heading for an energy crisis. And with energy crisis, the prices of energy, all energy sources, not only oil, is going up. That's a different dynamic for the macroeconomy than just oil. Because historically, oil on its own, and this might surprise some people, oil on its own, if prices go up, it does not cause a recession. Oil on its own does not cause inflation. It's really the reaction of governments and the reaction of fiscal policy and monetary policy that causes recession, that causes the inflation, etc. But this time is different because it's all energy prices. And the problem is, over time, we ended up with a situation where we created massive petrochemical complexes around the world, especially in countries like Saudi Arabia, and almost everything is being made out of them. I mean, the shirt, the jacket we are wearing, the tie I'm wearing, the screen I'm looking at, the keyboard, everything is made out of those, everything. And you start looking at it, and then you look at the fertilizers, the synthetic fertilizers that caused the crisis in Sri Lanka. You look at it, it's made out of natural gas, so it's coming from the oil industry. So when the prices of energy goes up completely in everywhere, in every sector, it does affect the cost of everything. The problem is that this idea of electrifying everything on one side, and having a computer chip in everything where I don't need it. I mean, I don't need electronic curtains in my house.
That's a great point.
But all of a sudden now I need a computer chip for that. And the making of a computer chip is a very energy intensive.
Yeah.
I'm not talking about the consumption. I'm talking about the making of it. It's very energy intensive. Not only that, people do not realize, just to make that chip, how much I have to dig mines around the world just to produce the minerals and the metals needed for these things. So you can imagine the energy needed for that. So we are moved by electrifying everything and moving to computerizing everything. Our life basically is becoming more a hostage of energy in general, not only oil, in general. To give you a real example, 2 days ago, the power went out in my neighborhood, and the temperature was 104. What do you do? I have a pool, and the temperature of the pool, basically the water was hot. I mean, you cannot even enjoy it.
Right.
So the only solution was to put my family in the car and drive around.
Wow. Yeah.
And despite the high gasoline prices, the safest way and the best way is to drive around and increase the consumption of gasoline. Why? Because we depended heavily on electricity to the extent that there is no other things. What we couldn't even sleep that night.
Yeah, so that's what, that's why I feel a lot of the energy policy is an attack on Western civilization. It seems like, with all of those conveniences that you just mentioned that we've been accustomed to for, how many decades now, pivoting the center of global energy towards electronic vehicles and battery power simply puts China at the center of being the global energy provider, as they're providing, all solar panels and everything along the ESG lines, everything along the electronic vehicle lines. So I see this as very, very destructive to our nation in general, broadly speaking, and a tremendous, tremendous opportunity for China. Right. And what the hard part for me to deal with now, as the euro gets utterly buried, as it faces this energy crisis that we're discussing, it's pulled all the base metals down 25, 30, 40% from their highs. And, those are going to be the drivers of the next electronic vehicle movement. And I feel like they're on sale now. I know that you came from the Colorado School of Mines, and I know that you've taught there. What's your view on base metals from this predicament that we're in right now, needing all the base metals and having a huge sale on the screens right in front of us, Dr. Anas?
Let me start with this. Over 3 years ago, I wrote a column in the Financial Times talking about how the electric vehicles are going to be the victim of their own success. And we have 3 serious problems with electric vehicles. Their numbers increase worldwide, and especially in the United States and Europe. And the 3 problems are: the first one is financial because we depend heavily on gasoline and diesel taxes. And OECD countries make about $500 billion a year out of those taxes. How they are going to replace them if they electrify the fleets? We already have seen 13 states in the United States basically increasing the fees of electric vehicles because they started losing on gasoline. So the first one is financial. If you go and we end up with 200 million electric vehicles on the road in the United States, how we are going to compensate for those taxes? Are they going to reimpose those taxes on the electric vehicles? Are they going to have per mile tax, for example, on it? That changes all the economics of it. That's number one. The second one basically is environmental. If we end up with hundreds of millions of electric vehicles, what we are going to do with the batteries? Are we going to end up with another Yucca Mountain fiasco in this case? Now, I know EV supporters, they talk about those nice technologies to recycle, et cetera, et cetera. We are not there yet. And the cost is still very high, no matter what, still there. They still need government support. But the third one is back to your point. The third one is the most interesting. Historically, supposedly, if you believe that the United States went to war because of oil, whether in Iraq or in other places, if you really believe that, and the United States at that time could have imported oil from more than 20 countries, many of them are US allies, then think about it this way. The countries that produce lithium and cobalt are about 5. And that include Russia and China. So you can see where the national security problem. The Biden administration realized this. So if you recall, several times he was talking about, we need to produce lithium in the United States. We need to do this. We need to do this, etc. Because they realized the problem. But this is not the issue. The issue is not only having lithium at home or cobalt at home. Of course, we don't have enough no matter what. But the issue is, if you look at the numbers, China controls the processing of those metals, each one of them, whether you talk about nickel, you talk about cobalt, you talk about lithium, you talk about copper or anything else, they control the processing. They control the batteries or the making of the batteries. And that's where the issues are, that they have this full, or not full, but kind of a majority control of the resources and a bigger share of processing. And therefore, we have a national security issue. And therefore, I can see a politician in the future calling for limits on electric vehicles. Say, I need 100 million and that's it. I'm going to stop here because this is affecting our national security. The fact is, to have a good energy environmental policy, to have a balance between the two, to fight climate change, what you need to diversify your energy sources. So we still need solar, and we still need wind and geothermal and others, no matter what. So we need all energy sources. And we need to diversify our imports. No matter what, we need to diversify our imports. We need to diversify our transportation technologies. Going and electrifying everything is a crisis. What happened to Colonial Pipeline in May 2021 could happen to the grid. And if it happened to the grid, we stop. The transportation sector is more important than the energy sector, by the way, to the economy. The backbone of the economy, the transportation sector, is not the energy. And if that transportation sector stops because it's electric, everything stops. So we need a diversification of technology of the transportation sector. So we still need electric vehicles, but we need that diversification.
It sounds like we're going to need somebody with some political sanity to creep into the picture and make the realization that, this transfer to carbon neutral by 2030 is certainly too aggressive. It's borderline impossible. Would you agree, Dr. Anas?
I mean, political sanity versus religion, I don't know how that works, because the other side is really a religion. This is a serious problem. I think we need the conversion. I will tell you a true story happened with me. I was giving this big presentation at a university in Ohio on a big stage, and the stage is very high. And in the middle of it, one lady starts screaming and yelling at me in front of everyone, telling me I am an agent of the devil. I am an agent of the oil companies. Who is paying you? Why you are saying this? And luckily, the snow was about 1 foot out there. And she did not notice or kind of what I was saying. And I looked at her. I said, thank you very much for coming here with this 1 foot of snow here, etc. I hope you did not walk. And she said, naturally like that, no, I drove my Suburban. And everyone started laughing. And I did not comment. It just the laugh was enough.
Yeah.
That's a sign of religion. That's a sign of cult. Yeah. That's what it is. She did not know what she's doing, but she is willing to interrupt a presentation at a university. And we found out later, basically, she is not even from the university. She was a teacher in the local school. She had nothing to do with the university in the first place. But that shows you it was a cult. It was a religion. So how to change that? I don't know.
Man, that's a big problem. You know what I mean? I feel like we're heading towards a disaster in so many ways. And I started off believing that it was due all to incompetence, and that I started off believing that the transition to ESG was something that, you certainly, you probably wouldn't, or let's say to environmental sanity, right? You probably wouldn't find too many people arguing with you saying that we need to be better to our environment. And so that I thought that the administration's policies were just, simply short-sighted and not thinking them all through, like we discussed what the third and fourth order consequences were. I'm starting, as I listen to their pushback and to their completely disingenuous pushback about energy inflation, I'm starting to believe that there is an element of malice that could be involved. And I can't get my head around it, but I can no longer lean on incompetence when, all of FinTwit all day long is basically been exposing all of the potential risks to this energy transition. And the White House is closed-minded as I've ever seen about it. So I'm really concerned. What do you think?
Well, the issue, I did develop a model. The result of the model is called the Energy Security Star. And it provided the solution. I developed this during the Bush administration, and I showed it to some people in the administration. They really liked the idea, but there was not enough money to focus on it at that time. I think there are real solutions to this. None of them are short run. All of them are medium term or long term. There are real solutions. There are real solutions for the global issues regarding the climate change. Because right now, what we have is you have the head of the UN basically is going crazy, accusing members of being crazy for investing in fossil fuel, while we have energy crisis throughout the world. And he is saying that. We have the head of the IEA basically is doing the same thing, while they are asking OPEC to increase production. We have the Biden administration doing this while they are asking OPEC to increase production. So we need really, so people are providing a lot of criticism, but very few solutions. And the Energy Security Star basically provide a real solution to this, where we can literally mitigate climate change. At the same time, we can have economic progress, economic growth, population growth, because many people on the other side, they believe population growth is the problem. They want really to lower the population too. That's not correct. We can have it all if we do it right. We need that balance between energy security and environmental security. And if you look at that Energy Security Star, for those who are interested, they can contact me. If you look at that Energy Security Star, it's a real policy if politicians basically adopt it and go to the UN and go to the COP27 or COP28 and tell others, look, here is what we can do. Forget about all the rhetoric and all those agreements and changing the wording in the and whatever we are going to say, and they fight over it, and etc. Forget about all of that. There are some real solutions that can be done on the ground. At least you can say, look, we have a serious pollution in the cities, whether you go to New York or Houston or Riyadh, Saudi Arabia, or Cairo, or any other country. Okay, you don't believe in climate change, that's fine. Forget about climate change. Okay, let's focus on the cities. Okay, I don't mind having electric vehicles in the city center, but don't tell me it is because of the ice cap. Okay, tell me I want to clean the downtown. I want really cleaner air in the downtown. I can help you. I can understand. Everyone understand this. My children live there. The schools are there, etc. So let's work on this local level, because as long as you keep talking about the ice cap like Al Gore long ago, and people did not see the ice cap except on TV or pictures.
Well, that's exactly my point. When they're trying to warn that the imminent danger of climate change is that the tide will rise, an extra half an inch, and that we're going to prevent that. I don't think anybody can really intellectually latch onto that. Where, as you say, which I really loved, the sensible idea of let's start with pollution. Right. That's something that everybody can get their head around, like a unanimous story where we want less pollution in the cities. Here are some options. They're greener, right? They're, electricity driven. There's less carbon emissions. They're affordable. They're executable. I mean, that to me sounds like a much more sensible approach. Is there any way we can find that kind of approach, Dr. Anas, or is that your?
Yes, it is there. But the problem is when you have a representative like AOC, and she talked to her people, to her followers, for 1 hour and 15 minutes about a gas pipeline and supplies of natural gas and the prices of natural gas. And at the end, basically, people did not know what she's talking. They really took her seriously. And any one of us who listened to her will realize after 10 minutes, she's talking about oil pipeline. She couldn't even differentiate between an oil pipeline and a gas pipeline. So what do you do when you have representatives basically cannot distinguish between oil and gas? How you are going to create a policy, a sensible policy, when the level of ignorance is that level? When you have an energy secretary who does not know what the consumption of the United States is.
Right.
Okay? So we have a serious problem. How you are going to convince those people we are going to have solutions when the common things they need to know, they don't know?
Yeah, that's where I wonder if they don't know them or if they actually do know them, and that's how they keep everybody thinking that everything that they're doing is just an uncalculated mistake, right? The exploding price of gasoline, the exploding price of fertilizer, food costs, everybody experiencing all this, really crazy inflation, all based on this batshit crazy pace that we're trying to transition to carbon neutral. I like your idea of starting with the cities and pollution. What are some other things that are sensible that we could do?
Well, one thing is, people should realize that if I am talking about an idea that you don't like, And that does not mean I am the enemy. Okay, I am your friend. I am here to help you. I am here. Both of us basically are here on this earth to survive. We are in the same city to live and survive. I am not your enemy. So the idea that the moment I say something that you don't like, it makes me the enemy is a big problem.
Right.
That attitude has to change to find solutions.
Yeah.
Because the moment you say something about, okay, let's do this. Oh, who is paying you? Why you think someone is paying me? Look, if someone is paying me, I don't have even to spend my time talking to you.
Right.
I'll be in Hawaii, basically on the beach, enjoying myself there.
Yeah.
But the idea is always you get this reaction like, okay, who is paying you? Who is this? And you are this, and you are paid by this, and you are the. Well, I am here to help you. Why you are not looking at it that I am really here truly to help you? I am trying to build. I am trying to do something good. No, someone is. So this idea is a big problem, and it is an impediment that is literally halting progress on all those issues.
I couldn't agree more, and that's where that's where how we ride out this trade, Dr. Anas, and kind of trying to stay with my bullishness in the energy sector despite this pullback and repricing into a recession, because I keep looking at the fundamentals, and I'm an old floor trader, so I never take my eyes off the calendar spreads and the crack spreads. And as long as structure remains as firm as it does through this repricing, it's hard for me to get bearish even after a $30 or $40 pullback.
Aside from that, if you don't mind, I'm going to mention the following, because I think the listeners will benefit from this.
Please.
We are, whether you are an investor or you are a trader, you benefit more from oil prices between 80 and 90 than oil prices above 90.
Yeah.
And you benefit for longer. The idea that those who are pushing for the narrative going to 150 and 200, this is a hit and run investment. Or this is really hit and run. That's it. You want this and just run away with it. But if you are a true investor, you look at the long run and you realize that 80 to 90 basically is a good range that we need to be at. So if recession is going to bring it down to 80 to 90, it's better for everyone, and it's better for consumers, better for politicians. And we don't have politicians that do not have to spend time on these issues. They can focus on other issues to discuss or spend money on.
Fair enough. Fair enough. I believe that. What are your thoughts, Dr. Anas? I know that you think 80 to 90 is a better range. What if I asked you which way do you think the next $25 in crude oil is directionally? Would you be prepared to answer that, or rather not?
No, it's not. I would rather not, because naturally I will give you three different scenarios.
Okay.
So it's really not a prediction as much as scenarios. Yeah, I mean, with the recession, with the recession, clearly now some people are making the point: if we have a recession or we are already in a recession, some people are saying, well, we've been in a recession and prices were above 100, so why announcing the recession will make it worse? Well, announcing the recession will make it worse, because how you are going to convince board members that you are going to continue with your investment? How you are going to convince board members that you want to invest $400 million? You cannot. Okay, so the moment it becomes official, we will get hit really hard because of this behavior, that board members are going to really be extremely conservative. And I'm talking about all industries. I'm not talking about only the oil industry. The other thing is people will start saying, okay, well, what if I lose my job? I'm going to save some money, and therefore consumption goes down. And the trip that I want to go and to New York with my kids, I'm going to cancel it because I might lose my job tomorrow. All of that is going to really contribute to further the recession for a short period. So one scenario is if we have a recession and they announce the recession, yes, it's going to be a $20, $25 down in this case. The other issue is we are having some serious problems in terms of fires, explosions, technical issues around the world, pipelines, refineries, LNG terminals, etc. And the frequency of them happening almost on daily basis, and we are losing capacity. And if this happened to a large outlet, we already had, basically we've been saved by the Russian court 2 days ago when they First they issued an order to stop the Caspian pipeline, which exports about 1.2 million barrels a day. Of course, it did not stop because they appealed, and the appeal was successful. But that would have been a killer. If we lose 1.2 million, that will compensate for all the SPR releases that the Biden administration is releasing on a daily basis. So if we have a big event like September 20, 2019, when Aramco was hit and we lost about 5.5 million barrels a day, what's happening in Iran? We have almost explosions every week in Iran. So if we start losing capacity the same way we lost the Libyan oil, by the way, the reason why the Libyan oil did not have large impact on the market, because this was expected long before. So it was easy to handle it, but we cannot handle extra. So in this case, the next $25 basically is going to be because of one of those big events. But as we are going right now, it is very clear that we are range bound, and it just happened that range bound with very high volatility, which is like $10 to $15 in prices, and that's the nature of the industry when you are on the edge. When you are on the edge, volatility naturally increases, and one of the problems we have right now is because of the diversion of the Russian oil, we have more oil on water than on reaching the ports. And one of the problems is most of those ghost ships, we don't know where they are going. So we are literally kept in the dark in terms of supply. We know those ships exist. We know they are laden with oil, but we don't know their destination because they are ghost ships until they arrive.
To wrap the whole thing up, it sounds like we're still going to be battling the ESG religion. We've got some reprieve here due to the market pricing in a recession. We've still got extremely tight markets, but we possibly have a big pullback in demand. So you've gone over a number of scenarios that really cleared up my picture of the oil markets, which I really appreciate. Are there any other points? Are there any points, Dr. Anas, that I haven't thought of or that we haven't covered? Yeah, let's go.
I'm going to sum them up quickly since we are ending the program.
Please.
Saudi Arabia, the UAE, Kuwait, and Iraq have some spare capacity until the end of the year. So we have no problem at all with spare capacity. Those who are saying we don't have spare capacity, and whatever Macron told Joe Biden, that was a political message. We have to distinguish between economic messaging from OPEC and the political messaging of OPEC. Anything that comes out of the meetings in OPEC, that's an economic message. Anything that comes out of the meetings, that's a political message. And we have to understand what it means when we talk about political messaging, which means that I want to enhance my bargaining power with you, and therefore this is negotiable. That's number one. So we do have spare capacity. We do have enough spare capacity within OPEC members. The numbers of rig count internationally that are published by Baker Hughes are not reliable. The exact number is way, way higher than what Baker Hughes is reporting. People are ultra bullish because they said the number of DUCs that drilled and completed wells in shale because of the drop, and therefore we don't have enough, etc. That's nonsense. There is a reason why we have those DUCs, simply because they were uneconomic when NGL prices were very low, so companies decided not to finish them. We have to look at it as what is the optimal number of DUCs for the industry. We are still above the optimal. What is the optimal number of rigs, etc., etc. So we are not supposed to look at the declines. We are supposed to look at what supply and demand and what the optimal situation is. If we look at inventories, the same thing. We have to look at the optimal inventories for the industry. We are not supposed to look at the decline alone. And therefore, we should use some measure, such as days of cover. If we look at days of cover within OECD countries, days of cover matches the history before 2015. Remember, we started talking today about how the prices collapsed in 2015. So today we are where, in terms of days of cover, and that covered the future demand. So we are at the historical levels we had before.
Can you break that out, the days of cover, a little bit for the audience so they understand
Yes,
a little bit?
the days of cover, basically, we take the total inventories available and we divide them by future demand. And we end up with the number of days. So if we block the country completely, we have no production, we have no imports, we have nothing. And we are using only the storage that is available, the commercial storage. We are going to keep our consumption as is. So we are not going to conserve energy at all. That's the number of days. So the number of days today are similar to the number of days we had before the collapse of the market in 2015. But people say, well, this is OECD and you are ignoring where the demand growth is. It is in Asia. Well, look at Asia. China today, the days of cover in China is 18% higher than what they were in 2019. And in 2019, China demand growth, or all demand growth, was 2/3 of the global growth. So you can see that the storage tells a story that we cannot be ultra bullish on oil, but the same story, the same days of cover, tells me that prices now should be between 100 and 110.
Okay, that makes sense. We're kind of on either side of that range. We've been trading, so maybe that holds. Maybe we plunge a little bit deeper if the recession does come out on paper and we register that second quarter of negative GDP growth. But it sounds like this dynamic of tighter markets and again the religion being forced on it is going to be with it to kind of balance out the upside. So I think we've given a really good picture of the crude oil markets, Dr. Anas. I look forward to speaking with you again about this. In fact, I'd love to have dinner one night because you've clearly forgotten more about the energy markets than I've ever known, and I still have tons of questions for you.
I would love to. Probably, I think in the next show, whenever that happens, we will talk about dollar pricing of oil and what are the choices, because other countries are trying to shy away from the dollar, and what is the impact of that on the oil and gas industry.
Yeah, we can go over that in the next one. I want to keep this one to about an hour and change, though. And I want to tell all of our listeners where they can find you. You've obviously been putting amazing information out on Twitter, and there may be other clients that need to get even closer to you than that. If you can share some info.
I wear several hats, and one of them is I do speaking engagements, especially before board members and institutional investors. I do advise governments and ministries around the world and some OPEC members. So those who are interested in reaching out for a speaking engagement, they can go either to my website, which is my name, ANASALHAJJI.com, and immediately they can see the form and all the application and all the information. And I spend a lot of time on Twitter. It's the same thing, Anas Al-Haji, ANASALHAJJI. And I put let me be kind of very frank about it. Most of what I put on Twitter is kind of baits. Most of what I put there, you have to read between the lines to know what's going on. And the other point is, I would like to tell the listeners, if you follow me on Twitter, I put a lot of information in Arabic, and please use that translate button, because some of the information is exclusive in Arabic, does not exist anywhere else. And you can get wealth of information out of just push that translate button, and you get it in English or whatever language you are on.
Massively helpful to know that. I've always been wondering what you were saying in Arabic, Dr. Anas, so it's nice to know that I have a translation button that I can hit now.
Great.
Yeah, well, I look forward to our next conversation. I'm dying to follow up on all the storylines that we discussed today. It looks like we're going to get a lot more information about the Middle East meeting, by the weekend and possibly into the weekend, and that'll probably have some kind of effect on prices. So we're going to be strapping in for more volatility until we see you next time, Dr. Anas. But thank you so much for your time today.
Thank you.
I really enjoyed that conversation. I thought you did an amazing job.
Hey there, revolutionaries. To join a community sharing professional insights like what you just watched, head over to realvision.com and get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Join our community of lifelong learners.